Jon Najarian, an options trader and co-founder of Market Rebellion, who has been at or is at the New York Stock Exchange today. Thanks for joining the programme, Jon. What is rational about these tariffs in your mind?
Well, I think when you look at the tariffs themselves, Trump only announced those last week with the idea that he was tariffing half of the amount that the countries that were tariffing our goods were indeed tariffing. I agree with the editor of the Wall Street Journal. The United States is unlikely to grow all of the coffee that we drink here in our borders. However, it's not about that. It's about our goods being shipped to Brazil, for instance, to Colombia, to Chile, wherever it may be, the UK, and them putting a pretty significant tariff on it that makes those goods unattractive to the domestic competitor. I mean, it's protectionism. We all understand that. But I think his misunderstanding of the situation is that Trump really is just talking about the trade deficit. He cares about that, but it's really all about the fairness of those tariffs that are being levied on U.S. exports.
The effect of those tariffs we've seen in the markets over the last few days, my listeners will have felt that in their pockets, or certainly in their pension pots, as will millions and millions of Americans. Who wins out of those tariffs, in your view, Jon?
Well, if those tariffs are the cudgel that I bet you and I both think that they are, because China, the Hang Seng, fell the most in 30 years on Monday. It fell by 13%. You will have riots in the streets of Beijing and elsewhere if that sort of panic continued. So what I think is Xi Jinping and many of these countries that do have unfair policies tariffing our goods versus what we tariff theirs, I think they will change very quickly that behavior.
So Jon, I just want to make this, forgive me, I just want to make this personal to people. They are losing money in their pension pots, some of whom are coming up to retirement. Maybe they shouldn't be so heavily invested in stocks, but nevertheless, they're coming up to retirement. They see that money disappear. And
it didn't disappear, though.
Well, it disappeared for now. It's disappeared for now, Jon. It's not come back to where it was before these tariffs were announced. It's not come back to where it was on Monday's opening bell. Well, but they get their sucker from the fact that in China, they are having absolute palpitations because they've gone again on tariffs. They've been beaten back by Trump on 50% tariffs, and the Chinese are really hurting. You think you're hurting? You wait till the riots in Beijing, etc.
Yeah, I think you're exactly right. Wait till the riots in Beijing and so forth. But to quote Warren Buffett or Charlie Munger, you don't lose until you've sold. So if your listeners saw what's happening and think that this is a long-term trade war that's going to go on for years, I would actively bet against that, first of all, and I have. But I would say they have not lost the value of their account. If they didn't take the money out when it was worth, let's say, 8 or 10% more 3 days ago, they haven't lost today unless they've sold. Markets go up and down all the time. 20% corrections happen all the time. And so, again, Charlie Munger, Warren Buffett's partner for years and years, as he said, if you can't handle the downs of the market, you don't deserve the up. Outperformance.
But the down is going to come primarily, and again, this is the focus of why Trump is doing this, it's the Chinese.
Well, the Chinese are the biggest one because they're one of the largest exporters on Earth. But the United States is the largest customer on Earth. Europe is the second largest. The European Union, the zone, is the second largest. So, when I think you're really going to see a prisoner's dilemma where if China does continue to fight against the president, as they have again reiterated today that they will do, they're going to hurt themselves because Europe and the EU have already offered 0 for 0. You heard that yesterday. And I think that deal will be struck. 70 other countries, according to Secretary of the Treasury, have come to the U.S. wanting to cut deals. So I think this is not going to be a one-day fix, but over the next, let's say this quarter, by the time we get to June, there will be new trade deals in place, including the USMCA, which is what used to be called with Canada and the United States, the free trade agreement, NAFTA. That is also due to be renegotiated this year into 2026. So I think you're going to see a lot of this happen much more quickly because of the threat of these tariffs and what they mean for people that are working in jobs in those countries that are tariffing our goods so heavily.
John, I've got to let you go, but just before I've got to let you go, but just before I do, you said that you've made a bet on this being a sort of blip in the market before it returns. How much have you bet?
Probably, well, I mean, I trade for myself, and we have educational systems and so forth for individuals. But my bet is in the neighborhood of $35 million that we will see a relatively short. By that, I mean 3 weeks to 4 weeks from now, we will have so many deals in place that the market's reaction will have been judged to be an overreaction at that point.
He's going long and he's going big. Jon Najarian, thank you very much indeed. Options trader, co-founder of Market Rebellion, been at the New York Stock Exchange today to watch it grow.